Today's number, 73%. That's the chance, according to Polymarket, that Donald Trump says the word dog in public before the end of April. The chance of a permanent US-Iran peace deal by June 30th, about 49%. So the market currently has more faith in Trump mentioning a Labrador than in Middle Eastern diplomacy, and that sounds about right. Welcome to Prediction Market Prof, the channel that uses data from prediction markets to analyze geopolitics and to see whether ordinary investors like us can profit from the wisdom of the crowds. Yes, we've changed the name of the channel. We've done 5 videos and only have a few subscribers, so frankly, we can still do that kind of thing. This is not yet Apple changing the iPhone. It's more like renaming a group chat. So please like and subscribe if you're interested in prediction market investing. Share with your friends, get it sort of going. That'd be really cool. So now, today we're updating the Iran trades, taking some profit, and looking for the next opportunities in these markets. The core thesis is still the same. Hormuz is Iran's leverage. Until that changes, there may still be value here. In recent videos, I argued that we should be cautious about very short-term markets, especially where insider trading might still be possible. But the longer-term picture still looks very tradable to me. So far, that's worked. We bought no on the Strait of Hormuz traffic returning to normal by the end of April. We already took profit on half that position at roughly 38% profits, and the remaining contracts are now trading at about 97.2 cents, meaning the crowds are predicting that there's basically no chance of that happening. We also bought no on traffic returning to normal by the end of May at 35.5 cents, and that position is now around 85% up. Now, I still like the thesis, but 85% in a short period is exactly where discipline matters. This is where investors take profit and gamblers start saying things like, I just have a feeling. There's still a month until the end of May, and maybe the traffic does return to normal by then. I don't know the future. So we're going to trim that position. I'm not closing the whole thing. I'm not abandoning the thesis, just taking some money off the table before the market teaches us manners. Now, why do I still think the broader trade makes sense? Because Trump faces a massive dilemma. On the one side, he is under increasing pressure to end the conflict, open the strait, restore shipping, calm oil markets, and declare victory. If he was successful in that, that would mean that we were wrong. On the other hand, doing that may mean accepting a deal that looks very much like losing. And Trump does not like losing. In fact, one might say his entire political brand is based on the proposition that losing is something other people do, usually whilst being called hideous names. The problem is that it is not obvious how he wins this. If he accepts a weak deal, Iran survives, Hormuz remains Iran's leverage, and he looks as if he fought a war only to end up with something no better and possibly worse than Obama's deal. If he keeps squeezing Iran, the conflict drags on, shipping remains disrupted, and this starts to look like exactly the kind of pointless Middle Eastern war he promised his base he would avoid. And if he escalates, he risks putting boots on the ground. One possible escalation is Karg Island, Iran's key oil export hub, and if Trump wanted real leverage over Iran in the Strait, Karg is the sort of place people start talking about. Polymarket is currently pricing that scenario, Iran losing control of Karg Island, at around 30 cents, or roughly a 30% chance, and I think that's quite cheap. But ground invasions are not the kind of thing I like investing in. People die, and I don't want to be buying shares in people getting shot. In any case, 30%, even if it is 30% and only 30%, it's not nothing. It would be politically explosive. Trump ran on no more pointless wars in the Middle East, and this is beginning to look suspiciously like a pointless war in the Middle East, only this time with prediction markets and worse oil prices. So where does that leave the trades? First, we're trimming the May no position on Hormuz traffic returning to normal. It's up 85%, and that's too much profit to ignore. Second, we're keeping the broader thesis alive. Hormuz remains Iran's leverage, and I'm looking for further opportunities further out, especially the June markets. And third, we're opening positions in Trump not announcing a lift on the US blockade by the end of May. The market currently has May 31st as the leading outcome in that blockade lift market, but I think that's still too optimistic. Because Trump cannot simply announce that the blockade is over unless the underlying problem is actually solved, unless Iran have lifted their blockade. He needs the strait open. He needs Iran contained. He needs victory without looking like he's blinked. And right now, it's not clear how he gets all three. So the thesis remains. Hormuz is Iran's leverage. We will keep milking that cow until the thesis is proven wrong, which eventually it will be. The trick is to take profit before the cow kicks us in the face. As always, this is not investment advice. Manage your own risk and never confuse a strong thesis with a guaranteed outcome. If you enjoyed this update, please like and subscribe, and let me know in the comments whether you think Trump finds a way out or whether the market is still underpricing a long, ugly Mexican standoff.